following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Option Block, and I hope all of our listeners out there had a great holiday weekend. My name is Mark Longo, and I will be the ringmaster for this three-ring circus known as the Option Block. And I have quite the crew of cohorts here joining me on the All-Star panel today, starting things off with the man holding down the Options Express hot seat, none other than Big Rob Kurzakowski, joining us after an extended hiatus off the show. Rob, welcome back to the program. How was your holiday, sir?
The holiday was great. It actually missed being on the show for so long. It feels like I'm almost a guest now. It's
yes,
been
you're a
almost a
returning
month
guest.
now.
And we are also joined on the All-Star panel today by the other man holding down the chair over at Option Pit. He is Andrew Giovanazzi of Slinky and, of course, Option Pit fame. Andrew, welcome back to the show as well.
Thank you very much. I'm sitting in for the Slinky today on this lovely Monday rally. So he gives me the easy days. Mark it up. You can handle that, Andrew.
And last but not least, we have Mr. Monday Mike, so it's all in his name. He is contractually obliged to be here on Mondays. Good old Mike Cavanaugh from Know Your Options Inc. Mr. Cavanaugh, welcome back to the program, sir.
Always a pleasure to be here, and it is officially in my Outlook calendar for the rest of the year and, well, the rest of eternity, that 3 o'clock on Monday blocked off for the Option Block. So I am proud to be Monday Mike.
Well, if it's in the calendar, it is irrevocable. There's no way around it now, sir. We are locked. If Outlook says it, it must be so.
It is so.
All right. And with the team assembled, we're going to dive right into the trading block.
The trading block.
And welcome to the trading block. This is, of course, the portion of the show where we discuss what was interesting, what was moving the markets, what caught our eyes on our trading screens today. And as Mr. Andrew alluded to in the open there, it was indeed a strong day on the street today. All the major indices finished up. We have the S&P up nearly 3% to 1192. We have the Dow up about 2.5% to 11,523. And the good old NASDAQ rallying, the chief amongst the ralliers, up 3.5% to 25,27. And, of course, the old VIX cash coming off on the downside, down nearly 8% to 31.8 0.86. So why don't we start off there as we are wont to do? Normally after a long weekend, you might expect to see a little bit of a pop coming back into VIX as people put some of that decay back in. Of course, that probably did happen. We probably would have seen the VIX sell off even worse if it wasn't for the fact that this was a Monday after a long weekend. Is that your consensus as well there, Andrew?
Yeah. Even though it's not much even. There wasn't much to put back in because I don't think they ever took it out. Everybody got so freaked out on Wednesday that they left it kind of perky. So when things drifted down, when the VIX obviously started crumbling a little bit today, there wasn't much to put back in because they never took it out on the Wednesday freakout we had last week. So, but this was a solid. I would have liked to see it come down more with the rally, but there we go with our 30 VIX and our 3% a day moves, kind of. I mean, it's funny to say that these are getting normal, but they are getting kind of normal. Like once, twice a week we get one.
This has to be normal going forward in order to keep these levels, right? We have to be doing this every day. That's what the numbers say.
It's the new for us. 300 points a day, that's all we ask in the Dow.
That's why I often divorce the numeric VIX, in terms of what the actual math says the index has to do with the sentiment VIX. Because the VIX reflects many different things. And if you look at the VIX as just a pure number, we have to move this pretty much every day in order to sustain this level. And yet there's a lot more baked into that 31.8 level than just the pure mathematical value and the pure implieds of what we're seeing in the S&P. There's quite a bit of sentiment in there as well, which is why we can maintain levels like this for a significant amount of time, even when the underlying isn't necessarily keeping pace with what we'd expect given these levels of the VIX.
And then we had a crack up the last couple of weeks. We didn't see that big jump in implied volatility either that we would have thought because we had priced those in. So it's, I think it's doing a fairly good job of trying to keep track of where, of the overall level of movement in the market, even though it's still a little heavy, but it's trying to stay close. So it's doing what it's supposed to do, I guess that's the easiest way to describe it.
And as you mentioned, it was a fairly decent weekend to be a long premium holder. Usually you don't say that often going into a long holiday weekend. But yeah, you're right. They didn't really hit the premium. They didn't really hit theta as aggressively as they would have in a traditional long weekend, just given everything else that's going on in the marketplace. People are a wee bit hesitant to take a full weekend out. I think a lot of people also want to go home net long units at the end of the day, given all the uncertainty out there in both Europe and over here. So it wasn't exactly a crushing. I was looking at some of our positions going into Wednesday night, and I was like, wow, actually these are performing far better than I thought they would, given a long holiday to come.
Yeah, I put that on a post for Wednesday night for Option Pit, just sort of that. It looks like everybody just remarked stuff on Wednesday. They took their sheets down, they took them down, and then all of a sudden they're like, wait a minute, this is madness. We're going to make people pay. So, and that's kind of how it worked out.
Like, I don't want to give away this weekend risk for nothing.
Exactly. And I think that's a fairly scary, in general, people are ready to move the needle really fast now. There's not a lot of dilly-dallying around. So it's just the way it is.
Yeah, I suppose when even the market makers are reticent to crush vol ahead of a long weekend, then something is in the wind, something is in the air.
I think so. I think this summer taught them I don't think they're in a rush to make that last sale like they were probably in August.
Yeah, I think we all have a new concept of weekend risk and how literally devastating that could be after the past few months and just all the things that have unfolded on Fridays going into long weekends as well as on the weekend itself and just the resulting tumult that can happen that you don't necessarily in this environment want to go net short into the weekend, especially a long weekend very often. You're giving away a lot of days worth of risk for usually less than ideal levels of reward.
Right. I agree, Mark. And
Mr. Kavanaugh, what were you guys watching over on the KYO screens today? What was lighting up your own personal tape?
Not a whole lot lighting it up. I think I hit on it last week. The primary part of this move happened pre-market. We open up. I think the S&P futures were up 28.5 points. The S&P closes up 33 points. We sold some calls on the Qs today. We had our November calls expire worthless in our collar, and we used today as an opportunity to sell some new premium on December. Other than that, there wasn't a whole bunch lighting up the screens. If you were long coming, if you had some long calls hanging out, deep in the money or whatever, you made out. But I don't know too many people like you guys were mentioning going into the weekends that are comfortable holding long call premium moving into the weekend. So we missed the majority of the move just by not doing anything. So if anything, I guess we somewhat benefit just having puts and an underlying on, and then the market jumps up today and we sold some calls on the Qs.
Oh, you finally had your chance. I know you were looking for your opportunity to light off some covered calls. So you finally had your opportunity.
We were itching, yes.
Are you back in on the short upside in Apple as well, or are you still wringing your hands on that one?
Still kind of getting tossed around if it has a place in our long-term portfolio. It's haven't made any final decisions yet.
It's not exactly helping you because it's right back to this 375 peg level now. I closed at 376.12, so we're hovering right around there again, and which is the level of uncertainty we discussed last week on this name and whether it's going to move substantially from this level or just vacillate around here for the near term or even for the long term. And I guess this move today hasn't helped you make up your mind any.
It has not.
And of course, last but not least, Mr. Rob Kurzakowski, what were you watching today? What was taking up your time on the trading desk in between all the myriad of calls?
Well, in addition to seeing a lot of retailer activity coming through option wise, we saw some people take the opportunity for with the markets rallying and vol kind of getting crushed today, to actually kind of beef up their hedges. We saw some people roll up their puts on some of the broad-based indices. Some people that were net long stock and kind of a larger portfolio of stock were rolling up their hedges, doing it relatively inexpensively today. And we finally saw this risk off in commodities come to at least a temporary end, with everything pretty much getting everything higher. Where we had gold was up pretty firm, but when you looked at the industrial metals, silver outperforming even the indices today on a percentage basis. Crude oil, again, on a percentage basis was a little bit firmer than the equity market. So we've seen so much risk sucked out of the market. As soon as oil crept above that $100 level, it got smacked down pretty good. And just kind of an observation from this weekend, I actually spent 2 days shopping at a higher end like electronics retailer up in Apt Electronics, and both days I brought my kids, but the second day I brought my wife to watch my kids, and people were spending money like the world was coming to an end. So
yeah, it was
kind of was a reassuring. When we drove around the malls, the Bed Bath and Beyond and some of the clothing retailers weren't doing so great, but as far as electronics and like appliances, I couldn't believe it. I mean, we went to Best Buy and a couple other places as well, and people were not shy about spending money. Also, very deep discounts this weekend.
Yeah, I think it was all. We didn't even mention the Black Friday effect on the retailers helping to cause this rally as well today, and I think a lot of that was due to the fact that a lot of them jumped the gun and started very early on Thursday, 9 p.m. Some of them started. So, and if you saw any of the lines or crowds, and we went by a few stores here in the Chicago area around that time, and it was a madhouse. I mean, I think when you start at 9 or 10 o'clock, you bring out a lot of people who maybe wouldn't get up at 3 or 4 in the morning for a deal, but they would definitely line up for some toys at Toys R Us at 9 o'clock and 10 o'clock. That's pretty easy, low barrier to entry there. So I think they really boosted the sales with that. I mean, we saw a lot of people out who probably in much larger lines than we probably ever have seen in the past. So that strategy seems to have worked despite all the heat it generated for the retailers for encroaching on the sacrosanct Thanksgiving holiday.
Yeah, pretty soon we're going to get to the point where it's just a bag lunch and people just head straight out to the mall.
Given the lines I saw, I think some people did that. There were some huge lines. So if you were at the front of that line, I don't think you had much in the way of turkey and cranberry sauce on Thursday afternoon.
Yeah, and it's not just on Thanksgiving Day. T-Mobile, I know, is one of the 4 big carriers. They had their Magneto sale the prior weekend. Amazon released their Kindle Fire ahead of. They were initially supposed to release it on Black Friday. They released it a couple weeks ahead of time. So it seems like everybody was trying to jump the gun, and now pretty soon it's going to be the Halloween the Halloween event where everybody is probably moving, or people are going to start moving their sales back to late October.
I wouldn't be surprised to see that level of desperation on the retailers. Given what we saw over the weekend, this is only the start of the encroachment. It will be, you'll be buying your deals before the turkey dinner pretty soon. Given what we saw this weekend and the effect on the sales going into this weekend, everyone was saying it's going to be a dismal season for retailers. It's going to be a dismal season for retailers. Everyone is just hunkering down for a terrible season, and then of course this weekend, boom, just off to the races. And the preliminary results today, it looks like, from the quote-unquote ridiculously cliche Cyber Monday, are saying that today's only 3 o'clock, and already the sales are up 15% over last year on Cyber Monday as well. But other than that, yeah, it's really interesting to see just the boon the retailers are getting today, and just the market in general from the madhouse that was Black Friday this past weekend. All right, and with that, we will dive right into the odd block.
The odd block.
All right, and welcome to the odd block. This is, of course, the portion of the show where we sit down and we parse the interesting and or the unusual options activity, and sometimes the downright, let's just say, questionable options activity that's lighting up the tape today. I actually want to kick things off today with a bit of a review. If you remember, on a recent show, we highlighted some bullish 1x2s and some bullish call spreads in Gilead Sciences, ticker symbol GILD, and this was someone who appeared to be betting pretty heavily that this stock, which had been crushed to the downside in previous days given news of an acquisition, that sell-off was overdone. And given what we saw over the last few sessions in GILD, it looks like this guy was on the winning end of that trade. I know, Andrew, you've been watching this one quite a bit. You think this guy fared pretty well in these trades given these upside verticals and these 1x2s.
Yeah, I think we even scored him like an 8 out of 10 on the smart factor, because he was buying the GP call spreads.
Anytime anyone does a ratio on this show, we automatically bump them up the scale a little bit.
Yeah, already. So I mean, he was buying. Let's see, like we said, we talked about the 36.39 call spread for $1.23 in January. He was a buyer of that, and it's already $2 bid.
That's already $2. Yeah.
So, I mean, and I think his 1x2s are going to take a little, they're going to take a little more time. I think he's going to have those things float down a little bit. I'm looking at 48 cents is what you paid for it initially. Let's see. So I've got, those are pretty close. I mean, they're now, he's going to have to wait. Basically, they're trading for around even right now on 1x2. So he's going to have to wait till, I think, the gamma caught up with him a little bit there. But if you still get some more compression, the IV's down and implied volatility is down a couple points. So I think he'll probably get what he wants out of that. And he was looking for around 40 to 41 bucks on that. So I think he's still in good shape for that to be a pretty big winner.
Yeah, if we hang around here, that 1x2 should pay off. And that's an important point to mention. We talk about ratios a lot on this show, and ratios can take a little bit more finesse for them to pay off, and take a little bit more patience, definitely, because a name like this, Andrew's right, the gamma did catch up with him in this sense that the stock gapped up, and he's not exactly seeing that payoff that you might have seen initially, because you have to move a little bit closer to that short strike, and you have to wait a little while for the gamma effect to wear off, and for some of that decay to come off some of those upside calls. And once that starts happening, this ratio is going to widen up, provided we stay here or drift slowly higher. Then
exactly,
this trade should pay off in the long term, so long as this guy doesn't jump the gun and try to essentially scratch the trade. That's what he'd be doing right now. He'd have a little bit of a winner, but nothing substantial here. But if he waits a little while, let this upside decay a bit, then it'll work out. I had the same dilemma I was facing last week. I had a 1x2 put spread in Ford. I think it was the Dees 1110, and we were hovering right around that 10 strike, and it was so annoying to me because you're right, that gamma was doing the same thing. It was keeping those I had the two shorts of the 10s. It was keeping those 10s juicier, far juicier than they should have been, just because the stock was moving around still quite a bit, and so you had to wait a while for that spread to widen out, and it finally did. But it does take a bit of finesse and a bit of patience for a nice ratio 1x2 to finally come into its own.
Yeah, you just have to believe that it's behaving. I mean, this guy could still fly this trade off and buy the 44 call in January and have a very cheap butterfly given where the stock is now. So, it's he's got things to do. I don't see any size trading there in some of these Jan 44 calls, and he's sitting on. It's the same guy. They're sitting on so much money anyway. They've got some room to maneuver. So anyway. You listen to Option Insider here radio, and there are some gold nuggets that do float around from time to time in the option block.
Oh, there are quite a few.
Just wanted to bring that up.
There are quite a few nuggets, quite a few diamonds in the rough here on the old odd block. In fact, we do tour that idea every now and then. Maybe we'll start doing that on a more regular basis, is going back and digging through those diamonds in the rough and highlighting the names that worked out and some of the ones that didn't, because that is also illuminating to our listeners as well. Not just pointing out the activity that's interesting, but also pointing out the names that perhaps fared well or didn't fare so well in the retrospect. And speaking of names that are interesting, I should say, in today's activity, we're going to kick things off here with MGIC. I love when stocks have a acronym in their title, yet that isn't their ticker symbol. So this is MGIC Investment Corp, and the ticker symbol, of course, is MTG, because that would make a lot of sense. So MTG here, they're a mortgage insurance provider. This is the name that closed today at $2.86, up 28 cents, or about 11%. So it's an odd block special. We love these little ones. It's a name that does roughly 7,000 contracts a day lately. They did about 44,000 today, so a big bump today in MTG, I'm sorry, I keep wanting to say MGIC, and 99.9% of that volume was in one sizable call sale. We saw these D3 calls just getting crushed 40,000 times for 20 cents. So this guy put it on obviously for close to $1 million, about $800,000 worth of premium here. He's collecting today on this trade if MTG stays south of that 3 handle prior to expiration. And this looks like probably it's an underlying holder is maybe getting a little fed up with this name and thinks it's going to hover here for a while, and for whatever reason can't unload it, maybe doesn't want to unload it, but wants to collect a little income on this name, is just dumping a sizable amount of these 3 calls. And also looking at liquidity, probably would be difficult to get in the underlying itself. This is the name that does, well, they do about 7 million shares a day, so it's not a entirely illiquid underlying, but still dumping 40,000 calls gives you a lot of opportunities to gain liquidity. Maybe would be difficult to find if you're just trading the underlying itself. So here's a guy, like you said, I'm sure you guys would agree, this is probably an underlying holder, not just a naked call seller. If it is, then he's a little more aggressive than perhaps I would be in such a similar scenario. And have you guys watched good old Magic, ticker symbol MTG, anytime recently?
No, I've never really paid attention to this stock. Anytime a stock gets below $5, it seems like it's a call option itself. I don't even look at the options when it's trading that cheap, but 40,000 of these things trade, and I don't know. It just seems like a flyer.
Yeah, and given the fact that it's under $5, this can't be a naked call seller, because it could be, but probability that's not, because most firms, options express included, you're going to have increased requirements. You're not going to get those really attractive Reg T, exchange minimums on selling those calls. Being in charge of the short sales here for a while, or for the trading desk, we've seen so many of these small stocks kind of just double in value really quickly. That this is probably something that's long, that just thinks that maybe this little 2-day rally may finally be it, and the stock may just kind of stagnate here.
This is why we like to have brokers on the show, because they bring in that margin and broker perspective that we sometimes maybe don't think of when we're trading. And yes, that's true. This would be a increased requirement trade, which would diminish a lot of the value for someone if they were coming out and just hitting these calls and naked. The amount of capital you have to tie up to do it would probably make the trade itself much less attractive.
Yeah, that's a big daddy margin requirement. Oh, go ahead.
It might be somebody trying, that's held the stock for a period that's trying to chip away at their cost basis. Just looking at a chart here, this stock was trading above $70 a couple of years ago. So, somebody got long above 50, they just took 20 cents off their cost basis.
Let's hope they weren't long from that level. If that's the case, and that 20 cents, you got a long time to go before you're chipping away.
You got
at
a
that
lot of
iceberg.
covered calls to sell.
Yeah, I know. You got a lot of 20 cents.
You're like a guy with a spoon trying to dig out of Alcatraz.
I'm just curious too. This name, is it the same kind of business that PMI? Didn't they just declare bankruptcy because of these mortgage insurers? I guess it used to be the easiest way to make money, I think, in 2007. And ever since then, I think the business has gotten a little rougher for these guys. I'm just curious if, this is somebody could have been picking up the stock down there at 2.25 not too long ago. So it does seem like somebody's did a kind of a smarty guy buy right on this thing.
Yeah, I'm looking here at the news here, and they have indeed been announcing a steady series of losses here at MTG. So it hasn't been banner times. Whether they're as dire as PMI, I don't know, but not exactly bullish times here for MTG, as our friend dumping 40,000 calls would no doubt agree.
Yeah, I don't see how that's really a bullish trade in any way, shape, or form.
No, and if he's long from north of 50, then we just have good wishes to you, sir. try to put that pain behind you and move on.
He's got a ways.
Maybe you just dump that and move on, because there's no coming back from that at 20 cents a pop. All right, and next up on the old odd block, we have a BlackRock Inc. ticker symbol BLKS, and ticker symbol, it actually makes sense. I can get behind that ticker. And this is a name that closed at about $159.83 today, up about $8.50 or nearly 6%. And what we saw, despite that upside move in the underlying, we saw a lot. Perhaps despite that, we saw some bearish put spreads going up here in BlackRock. This is a name that does about 1,000 contracts a day. They did about 22,000 today. The bulk of that, 17,000 contracts, went up in the Jan 115 130 put spread. They picked it up for $1.80 here. So this is, looking at the chart here, this is probably, like we talked about earlier, this is probably someone I would wager who has some underlying, or actually no, this is so far out of the money though. You're not getting much in the way of bang for the buck. So let me rephrase that. I think this is someone who's putting on a naked spec here. That if you're putting this on for protection, A, it's January, B, it's so far out of the money that the amount of protection you're getting for it is relatively moot. Perhaps you guys disagree, but I'm going to lean on the naked bearish speculating side of the equation.
Yeah, I can't disagree with that one. They're looking for really new lows for for this stock for the year. That's pretty aggressive, considering how it's been for financials this year.
Come on, Andrew, just pick a fight and disagree, just for the fun of it. Let's make a show out of it here.
All right,
you're a fool. How dare you say such things?
Yeah, well, given the bad publicity that the hedge funds have gotten recently, and the MF Global, and the just the amount of European risk exposure that is starting to just little rumors coming out about various funds, maybe some of these hoping for a very kind of large scale slowdown to the fund business, but I mean that's pretty wishful thinking on their part to be putting these on well below the market here.
Yeah, this guy looks like he's taking a lottery ticket flyer here on the downside. And we're going to close out the old odd block today with a little name you guys may have heard of. I've never actually heard of it. Charles Schwab, you heard of this one? It doesn't ring a bell to me. Ticker symbol SCHW. And this one will be fun for you, Rob, because we saw some bulls, or maybe one bull, I should say, coming in to Schwab today. Schwab today closed at $11.30, up 53 cents. And given the size, this might have been Tim Navabi. I don't know. I know he likes to sling a lot of size. And we all know he's a bull on Schwab. I actually was surprised at how light the volume is. Schwab is the options volume. I haven't watched Schwab in a while, and you're only averaging about a couple thousand contracts a day, and they did about 7,000 today. I would have thought that Schwab would be a heavier issue than that, but the bulk of today's activity was actually this bull coming in and scooping up 5,000 of the Jan 11s here for 95 cents. And Schwab closed at $11.30, up about 53 cents on the day, or about 5%. So this guy is already looking in the money here on these Jan 11s and thinking that good times are ahead for Schwab. I thought this was a fun one to close out the old odd block on, because it does hit kind of close to home for us. And I'm sure Rob, you agree with this guy's sentiments.
Yeah, I mean, this does seem a little bit light to be Navabi size. That's
true. It has to be at least 10x that to be pure Navabi size.
So, yeah, I mean, it's certainly a aggressive play, expecting a few percentage points higher through the January expiration. But other than that, I really can't say too much about Schwab. Other than,
come on, talk up your own stock a little bit. It's
opinion.
Fun. But yeah, interesting. We saw a pretty sizable, comparative to the rest of the volume going up in Schwab, a pretty sizable bull coming in today. So we'll keep an eye on this one as well. Andrew, file this in your follow-up calendar, and we'll see how this one pays off for this guy in a couple of months. He's already looking pretty decent. He's went out 95 at 105, so he's got a little bit of a bump, probably the bulk of that due to his sizable buying activity today. But stock was also up 5% today too, so that'll help as well. So interesting. Got a long 57 long delta, so he's getting long about 285,000 shares right here, so you can look at it from that perspective as well. Interesting trade, and that is going to close out the old odd block for today. And now we're going to roll right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. This is, of course, the portion of the show where the boys from OX take the reins and we dive deep behind the curtains of the OX platform to see what's hot, what's trading, what's going on in the land of OX. And, of course, if you are interested in OX and all the things we've discussed here on the show over the past year plus now, then by all means, surf on over to optionsexpress.com/OXradio, and you can check it out for yourself. We have a nice little deal there. You can get some free trades, so you can kick the tires and light the fires and see all the fun stuff that Rob and Tim and John are talking about here on the show on a regular basis. So with that, Rob, take it away, sir.
Well, today I'd just like to kind of talk about what we saw last few sessions here. It went from extreme doom and gloom to all of a sudden everything is great. Everybody is spending a ton of money, and you're having this this great trading session. And I think that a lot of times traders kind of get blinded by the front page of the Market Watch and Bloomberg's and Yahoo Finance, and sometimes don't always kind of dig deeper into or just kind of think outside of the box. And
are you implying that the market is somehow fickle, sir? How dare you? I take deep offense at that statement.
And it's it seems like if you're long and the market's up, people are just kind of like, okay, this is good, let's keep rolling. But the turmoil that we've seen in Europe recently, it's kind of like like my 4-year-old playing with a jack in the box. She keeps turning the handle, and every once in a while the jack in the box pops out. And except for a trader, the problems with Europe, that jack in the box is hitting you in the face like Mike Tyson. So we've seen some traders kind of learn from these recent events, and they actually used today's exuberance to buy some relatively cheap protection on the downside, as I alluded to earlier. And this is also as far as the precious metals, where ETFs have their place. We've seen recently that it seems that whenever crude oil catches a bid, gold just kind of has these really lackluster moves. It kind of lags behind the energy sector, and vice versa. It seems like there's a lot of interchangeability there between traders, where people that trade metals happen to trade energies as well, and they kind of latch onto one market that's hot at the moment. And using if you're long-term bullish, just kind of using these ETFs as a way to without leverage, without fear of margin call, go out and gain some exposure to the market. So it's constantly planning ahead and kind of learning from your mistakes. Just because the market is really exuberant today doesn't mean that you're not going to have some real nasty infighting with the EU tomorrow. And actually, I was kind of surprised at the market looking at the E-mini S&P last night. There's some really, really bearish statements made by some people in authority in the EU, basically saying this is a disaster. We're in a full-scale crisis right now, and the market just kind of largely ignored it today, just kind of fixated on those Black Friday numbers and looking forward to Cyber Monday.
Yeah, that's true. I mean, we neglected to mention in the trading block today, but this rally today went on despite the fact that Moody's came out and warned of potential downgrades throughout Europe if these troubles persist. And that's the sort of news that would have sent the market into a tailspin 6 months ago. But maybe we just shrugged that off today because a lot of people were in line in front of Toys R Us last week, so that things must be good.
And actually, if you had that news come out on Wednesday, it would have sent the market in a tailspin where we'd be down 3%. And as far as just kind of other things that we saw here at OX, the ICE exchange had some major issues this afternoon, which I'm sure that those of you that closely watch the market saw a lot of blocked markets, locked quotes because of the bad quoting issues. We try to move those orders very quickly. We strongly advise if you have an order, looks like it should be filled, or if you have a market order and you see a little message pop up on your order status page or on your order form that says the ICE exchange is experiencing issues, please do give us a call. We're just because the exchange is down does not mean that we are down, and we will make you good on those orders if in fact they were entitled. So it's one of those things where it also is a testament to how smoothly we do run at Options Express, and how quickly or how much better technology is now than it was 5 years ago, where we'd have to be manually basically working all those orders and rerouting all those orders. So if you didn't experience any issues, it's a good thing, because that's what we actually hope that happens when the ICE or another exchange has problems. Yeah, please, if we're experiencing issues, do give us a call. We if the exchange stinks that day, it doesn't mean that we stink. So, please do.
I've been seeing a few of those notices coming across my screens lately, more than usual. And have you seen a lot more coming out of ISE lately? Because I know they are running some completely overhauled tech over there. Have you noticed an increase in issues on their end since they started running that optimized stuff?
Actually, when they initially transitioned over to the optimized platform, they were down like every other day. We had to reroute all the orders to other exchanges, and today's was kind of out of left field, because it's actually as the volume was kind of slowing down that they experienced these issues. And normally we have their front end, which is called Precise, and we're able to cancel those orders and confirm orders on that front end, and we weren't able to. So it was just kind of a very odd issue. Usually there's, if they happen before the open, when we were doing our initial morning submit, that's a good thing, because we can we can move all those orders before the markets are even open and just shut off the server to the ice until they give us the all clear. But they've actually, all the exchanges have actually been really good lately. But the exchanges that we've most recently had issues with were Arca / Amex had a couple of technical hiccups toward the tail end of October, but those were relatively minor. But it was back in September, I think, that they switched over to the optimized platform. That's when they had some of their issues, but they've been ICE is pretty good. They really pushed their exchanges, SIBO and Philly, to push their own technology forward. I think that without the advances ICE had in technology wise, we probably wouldn't even see C2 from the SIBO, which of course gives us a trading venue and all types of new challenges as well.
Of course, it also gave them a chance to put a new spin on SPX, which they've been dying to do for quite a while over there. So there was more than one reason for skinning that cat.
Yeah, you get to so they walk off the train. I get to see that giant SPXpm advertisement in Ogilvy Station.
Who'd have thought they would turn a traditional hiccup of the SPX, its size, into a strength? If you look at all the new advertising, including on the optionsinsider.com, we do have some SIBO ads up there. They're pushing that the size of SPX as an advantage now. Why trade 10x on the SPY when you can just trade one of the SPX? So they're trying to turn that to an advantage, which is interesting. They're obviously targeting a very active, very high-end retail subset with that type of advertising, and it'll be interesting to see if it's working. Maybe before we close out on the odd block or the Xpress Block, really quick, have you seen an uptick in people looking at the SPXpm over at OX?
Absolutely. Initially, we had people that were kind of touch and go, just through a couple test orders. If they normally traded 50 contracts on the SPX, they were maybe putting 5 or 10 out there on the SPXpm. Once they began taking advanced orders, that certainly helped out, because at the first 2 weeks or so that C2 was open, they didn't take any advanced orders, so no spreads, no butterflies, no condors. So now that the exchange accepts those orders, we're definitely seeing an uptick. I think that the way that the settlement process is handled, it's a really difficult process to perfect, because you ask 10 people what's the right way to come to a settlement on the SPX, and you're probably going to get slight variances in your answers from those 10 different people. A lot of people feel that it gives them more control. The one thing that is kind of lacking that we've seen is the price improvements that we see on the SPX. You just still see a lot more market makers trading the SPX. So I think that a lot more traders would transition over if we had the spreads were maybe narrowed up a little bit more. We were seeing that same price improvement percentage on those SPXpms. Traders, that's one of the qualms that we have with the VIX, with the other broad-based indices, is the settlement process. And OEX isn't any better because you can get assigned and you have that assignment risk. So I think that this really does appeal to a lot of traders that have kind of been burned in both those situations. Yes,
that's true. Well, Rob, that's an interesting update for you. That's quite the wide-reaching update we had over there at the Xpress Block as well. We covered a lot of facets there. I think it's interesting stuff that a lot of our listeners are interested in, and we'll have to bring you on the show more often than once every 6 months or so, Rob, so we can get more of these updates from you. But thank you for that, sir. And now, since we're running a wee bit long, we have been gabbing quite a bit here, but it's all so fun. We're going to dive right into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the portion of the show where we discuss what's on our screens for the next few sessions, what we'll be watching, what is catching our eyes. And of course, we discussed earlier in the program that things are definitely rosy today with the afterglow of Black Friday and Cyber Monday engulfing the market and driving all the major indices up around 3%, but there still is there are quite a few dark clouds looming out there on the horizon in Europe particularly, so there's a lot of potential for some downside coming forward. So that in mind, I think there's a lot of interesting things to discuss going forward for what we're watching here in around the block. And Andrew, I'll start with you because a little birdie has told me that you guys have been pretty active in Groupon lately. And of course, if you watched Groupon, you remember we discussed Groupon last week on the show, maybe it was 2 weeks ago, and talked about just the juicy ability to leg into some conversions and reversals out there and just the intense demand for puts out there. So if you're one of those people who paid those inflated premiums for puts, it looked like a bad trade at the time, but it looks like it's paying off. And if you were one of those, I'm sure many of our listeners who fall on the degenerate premium selling side of the camp, and they were lured in by those juicy put bids, you probably got a bit of a hurting over the past week. Of course, Groupon playing the mini-widowmaker to Netflix lately. This thing was trading $25, $26 not too long ago, about a week ago, and it closed today at $15.24, down 9% today. So I'd imagine there was quite a bit of put selling activity on the 15 handle and around that range, and yet and certainly quite a few people didn't think we'd be trading there this quickly, but c'est la vie. So Andrew, you guys have been pretty active in Groupon of late?
Yeah, mostly we started bringing it up just because of the hard to borrow situation. It was so out of hand. Generally, when things are that bad, they're that way for a reason. So Marx was recommending buying puts in there, and obviously the stock has tanked pretty heavily. What is it, down 40% or something like that?
Yeah,
so,
this is pretty bad. I mean, usually you see this in these kind of IPOs down the road a little bit. They have a bit of a honeymoon period before the Netflix-style crushing sets in. But Groupon had a week, maybe two.
Exactly. Go ahead.
On the day of the IPO, I've never had, other than Tesla Motors, I've never had this many people ask for a locate on shorts, and we had to go through the whole short sale rules on IPOs with customers. I mean, people just were, people were trying to short this when it was just a rumor before they even went public. So yeah, definitely a lot of bearish sentiment out there in Groupon.
You had to be pretty bearish to really to dive in and pay those inflated levels we were seeing for the D's puts. I mean, things were just were crazy in front month, and yet it paid off. Ironically enough, if even Sebastian was counseling getting long those crazy premium levels, then he must have thought there were some dire things at work here in Groupon.
Right, and what's funny too is they actually came in just a little bit for some crazy reason when the borrow got easier, and then he got a little more excited about buying puts in there, and then it all just fell out of bed. Now it's funny. It's like whatever people are covering, and the borrow's back to somewhat realistic level, but still, I don't know how they're locating any of this stock at all, but I guess they are somehow. But I mean, look at the December conversions. All that stuff is moving closer to, I would call inline, loosely called inline, even though with 3 weeks to go, but. It's look at that. Now I'm looking at what's set up the next stop, LinkedIn, right? I mean, I know that one. What price did that go public at, and where is it down to now? I mean, wasn't that just an $85 number?
Don't talk bad about LinkedIn. That's that's an Auntie / Monday Mike favorite there.
Hey-o.
I'm looking for these companies. They're gonna get more. It seems like they're gonna stay fairly volatile until some of those, they bring in some of the big earnings dollars to pay for the valuations, and we're going to have a couple more of these coming out. So I'm just calling it like I see it. That's all. Although I think LinkedIn is a fine product overall.
He's trying to placate you there, Monday Mike.
Yeah. Well, it is a stock that IPO'd around 80. We got long on the first uptick. It came back down to 60 about a week and a half, 2 weeks after the IPO. And then it shot up I think it got up to over 120 at one point. When it took out the original IPO price, we got in at 95 on the way up and got out at like 105 before it peaked. And then I think that was right around our anniversary show, our 76th episode, our live show. And we came back down to our entry price and I backed out, and it hasn't looked good since. And I know, I think it was a couple weeks ago, the insiders were allowed to begin the sale of their restricted stock, and it hasn't looked back. So, I mean, the stock was trading around 80, 85 bucks. They had earnings, and then the restricted stock sales, they were able to sell the stock, and it really hasn't looked back. And I think today it made a new low, an all-time low.
It closed at 60 even. I know you're right, this summer, we were talking about, back after the IPO, people were talking all about you remember the griping that was going on about having missed the chance to buy LinkedIn. You saw it in all the news outlets and how dubious the IPO process is and how only these insiders could get in. I believe the IPO level was 40 or 50, but you couldn't get in there. It opened around 80. So people were lamenting the fact only insiders got that 50 level. So we talked about some strategies, selling some downside and whatnot to essentially leg into getting the stock at that 50 level. And it seemed
when
like
you say insiders, you mean senators.
Yeah,
I'll just make that clear.
I did listen to that show recently.
It's not illegal.
And I have heard that in the past. I've heard years now that if you compare the trading records of corporate insiders versus hedge funds versus congressmen and senators, the congressmen and senators win every time, hands down. And the fact that they have that nice little exemption is pretty interesting. And their insider trading runs the gamut, not just equities, but land deals. Here in Illinois, we have that highway, them out in the suburbs, and our former speaker, Dennis Hastert, acquired himself a nice juicy piece of land right before he routed that highway right past the land that he held, and then, of course, dumped it for millions of dollars in profits. I mean, you could sit on the healthcare committee and then enact some legislation that's going to crush stock X or stock Y and go home and buy all the puts you want before that news becomes public. And for some reason, that is not material, non-public information when you're a senator or a congressman. If you're in the White House, if you're in the executive branch, if you're in the judicial branch, you can't do that. But if you're in the legislative branch, you have a nice little loophole, and it's a pretty lucrative one.
How do they make those rules? Oh, that's right. They voted for them for themselves.
The guys who write them conveniently left a little loophole for themselves. So people wonder, why do you spend millions of dollars to try to get a job that pays, $120,000 a year or whatever? This is why, because you can route highways past your land, and you could short and stocks ad nauseum. In fact, I think the interesting points of that program, and I do encourage everyone, all our listeners who haven't had a chance to listen to that 60 Minutes program, you can listen to it online, you can download the podcast, but they make an interesting point too about the growing audience of they call it congressional intelligence, people who are out there mining these committees. But these people out there, hedge funds and others, paying people sizable amounts of money to essentially lurk around the staff members of these congressmen and senators and see what they're working on and get the whispers and the scuttlebutt of new legislation coming down in Washington and then trading off of it and making a bundle as well. So it's interesting to see the various, the nexus of money and power and how that stuff collides down there in Washington. If you have a short fuse, or if you have a low tolerance for just complete hypocritical absurdity, then maybe you shouldn't watch that episode. But obviously it's been bothering you for some time there, Monday Mike.
Yeah, I mean, it's past the point of frustration. It's, it is material non-public information, but the people who wrote the laws wrote themselves the loophole. And, with the Rajman Carey guy or whatever, he just got put in prison for 12 years for insider trading. And
he should have run for Congress first.
Yeah, I mean, you want to start a hedge fund? Well, be a congressman first. Or
that'd be hilarious.
Run for Senate. I mean, can you imagine if the senators were running hedge funds? Hey, why not?
They'd be killing it.
They're not going to come out of the Senate and run, take a job for $400,000 a year with bonus. Why would they take a pay cut?
I remember I had the first inklings of this a while ago, and I remember Bill Frist was still in power there, and he was trading in and out of his family's healthcare stock, even though it was supposedly in a blind trust. And I kind of wondered how blind could it be if you're actively negotiating activity in it. But aside from senators and whatnot there in Washington, what else is on your radar coming up there Monday, Mike, for the KYO holdings?
We made a pretty pretty big adjustment by selling the calls today. We're still talking about Apple. As far as any promotions or lunch and learns, nothing real new on the table over here. We just keep plugging away. The market is extremely volatile right now. I mean, even with the big update today, the VIX is still at 32 and change. So, if anything, more the same. We're going to stay locked in with our hedging and our collars, and when this volatility does subside, we'll have protected our principal and our client's principal enough that we'll be ready to invest when the market normalizes.
And Big Rob K, aside from the hubbub over Black Friday and Cyber Monday, what else are you watching on your screens for the next few sessions going into Thursday?
Well, going into the latter portion of this week, obviously we're going to be playing catch up with the economic indicators because of the holiday week last week. Some big numbers other than obviously the employment numbers and non-farm payroll that later on this week. The Fed Beige Book comes out, which is it's always nice to have an insight into what the Fed's mindset is. It seems like the Fed's always kind of focused on different things at different times. So it probably give you an insight into policy making decisions, and getting back to Europe, seeing how how much pressure is going to come on the money as far as the sovereign debt situation in Italy, and seeing how close we get to actually get away from a pan-European currency. Fitch just actually downgraded the U.S. outlook to negative as well. See how that has an impact on trading going into tomorrow. And
why would that matter? Black Friday was good.
Yeah,
nothing else matters, Rob.
Yeah, and they were the last rating agency to have at least a stable outlook. So we'll see how the market kind of reacts to that. But I mean, we're just gonna be focused on mainly some of the housing numbers coming out tomorrow, Wednesday, and then the job data from Wednesday to Friday.
All right, and that is going to do it for this episode of the Option Block. I want to thank all of my cohorts here for joining me in the three-ring circus known as the Option Block today. And starting things off with good old Monday Mike, what is coming up in the land of KYO that may interest and or intrigue our listeners?
We've got the standing resting offer out there, a free portfolio review. If you go to our website, knowyouroptionsinc.com, click on the stopwatch. We're more than happy to go over your entire portfolio and see if we can help you naturalize, I guess is the word we're looking for, your stock market returns. Normalize. We'll go with normalize. Take some of the volatility out of things. We're more than happy to come to your hometown. If you can get 5, 10, 15 people together, we'll put a seminar in your living room, in your place of business, wherever. We've done it before, traveled around the country, educating people on what the value in using options in your equity portfolios is. So stop at our website, click on the stopwatch, and we hope to hear from you.
And my advice remains standing. If you do come in for the lunch and learn, stay away from the lobster bisque. I think Mr. Tusaw was a wee bit heavy on the cream with that one. But the filet on Monday, Mike, that was to die for. My hat off to you, sir, on that juicy, tender filet for the lunch and learn. So indeed, by all means, swing in for the lunch and learn. It is a delicious,
it is
tasty
bring
treat.
your own lunch. And
you've changed that.
Filet, so.
So I shouldn't have showed up with the Gibson waitstaff in tow. All right. And also, what is coming up here for our listeners that might interest them over in the land of slinky.com? optionpit.com.
Well, what we have is we're actually launching something called the strategy letter. And the idea is people can actually are subscribers to what we call Option Pit Live, which is sort of our daily live updates. The strategy letter will be email, kind of like a blog service, but it will be updating positions that people wouldn't normally trade. The idea of this is a different type of strategy. We want people to understand how it's going to work out, putting on the trade based on what we think are good market fundamentals, and then showing how to adjust and wind, and just getting our subscribers to also look at other parts of the market and the way other things function, in the option market. So far, and it's been pretty good.
So what is
to it.
What is an example of a trade people wouldn't normally trade? You're talking ratio iron butterfly swaps or something exotic like that, or what exactly? Give us some examples.
Let's say I had an example in Rambus from last week where we sold the at the money straddle and we bought a call against it because we're making a bet on the implied volatility in December crashing. And what we also did is, when Rambus dropped down a little bit, we bought a put against it, and it actually became like an iron, like an iron butterfly. But we didn't just start by putting the position on. We went more looking actually toward the volatility trade first, and then the position is kind of built around it. And now what happens is you could buy the straddle back, and then you could keep the strangle for a credit. So that's not the way people might normally trade those things, but that's kind of, that's what the market gave us on that particular one. So
see, I just knew it had something to do with iron butterflies. I could just sense it from the way you were talking.
but that was what fit. So the iron butterfly is kind of what fit. I know exactly. Whatever sounds the most confusing. But also we are covering hopefully more stuff like the hard to borrow situations in the Groupons and things like that, where a lot of people, they don't quite understand why things are priced the way they are. And part of the idea is, this is the trade because this is the way things are priced. What do you do when you have it? And that's what we're trying to do.
Well, that's where the rubber meets the road. I mean, anyone can put a position on. It's not exactly rocket science to do that, but how these positions pay off really comes down to how you manage them. You can put on the best position in the world, but if you manage it poorly, it's not going to pay off for you. And if you have a bad position, you can still manage yourself to a decent outlook and a decent return overall if you know what you're doing. And you're right, when we were on the floor, you never sat with a position. You always were doing something against it. You were writing calls, you were spreading things off, you were doing underlying, whatever the case may be. And I think a lot of retail, they don't have that mindset. They put a position on, they wait to see what happens. So It is definitely useful to have someone in there helping hold their hand and show them, hey, here's the next management steps you could take with these positions, because that's quite frankly what's missing from a lot of options education these days. People say, here's the position, here's the payout graph, and that's it. But what happens in between those 2 points is 99.9% of the battle.
Right, exactly. So the only way to do that really is to update it daily, right? And we take it off when we think it's good to take it off, or keep it on when it's kind of still giving us some life. So, and the only way to do that is to update it. So it has to be kind of a dynamic thing, and that's what we're trying to achieve with it.
All right, so listeners should surf on over to optionpit.com to check out that and all the other fun stuff you and Mr. Seabass have going on over there. And last but of course not least, Big Rob K, what is coming up in the land of OX you think will interest our listeners?
Well, those of you in the Austin area on December 3rd, we have our Options Express Austin workshop, and that is in I believe that's the South Marriott Hotel. I think
that's what they said last week. Yeah, the South Marriott.
Yeah, it's the Marriott South Austin. There it is.
I remember because we joked that who would go to the North Marriott? That's garbage. That's the South Marriott. That's where you want to be.
That's the one you want to be at, and is something that our education department here, if you're not able to attend the workshop, has been doing is it's called the Express method. That's actually setting up a trading plan. It's also they'll do a site tour on the webinar, and we have actually two webinars kind of almost back to back on the tomorrow on the 29th at 11 a.m. Eastern and 1:30 p.m. Eastern. Parts 1 and 2 of the Express method, setting up a trading plan, and it'll also give you an overview of our website and how to use the different tools on the website. So I think that's sometimes traders don't always have an actual targets in mind, and this actually helps kind of organize things for traders.
Well, thank you for that, Rob. And that is going to do it for the old option block for this episode. But of course, if you want to learn more about any of the topics we discussed on today's show or listen to any of the other shows we have on the fine Options Insider Radio Network, then by all means surf on over to theoptionsinsider.com. You can check out all of our unusual activity information there, as well as our alerts and our analysis and some interesting comments from Mr. Seabass and others on our site. We are indeed quite the clearinghouse for options information these days. And of course, if you're in iTunes, just type in Options Insider and into the search bar, and you can find all of our lovely programs that way as well. But I want to thank all of you out there for downloading and streaming and subscribing to the programs and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.